New Century Resources has released a positive restart study for their Century Zinc Mine in Queensland. This has resulted in a slight increase to our valuation to $3.10 per share. Since relisting earlier this year, New Century has been busy working towards the restart study, which has resulted in the company continuously updating the market as results have come to hand, meaning a number of the key variables were already factored into our valuation. However, the study did throw up a number of key factors that are worth highlighting. First, the study confirmed the extremely low operating costs of just 50 cents per pound. This was an excellent achievement and will see the project become one of the lowest cost zinc operations globally. And whilst we expect the zinc price to remain strong throughout the project's 6-year mine life, given the current and expected ongoing shortfall in supply of zinc, this does provide further comfort for investors that even on a worst case scenario, Century will remain a highly profitable operation. Secondly, the company confirmed initial capital costs of $50 million with a peak cash drawdown of $63 million when working capital is included. Given the current cash balance and debt facility which will soon be finalised, New Century has access to more than $100 million, meaning that even if there wasn't overrunning costs, there will still be sufficient cash to bring the project into production without the requirement for an additional raising. And finally, the throughput at the project increased to 15 million tonnes per annum, which is more than twice the historical operation's 7 million tonnes per annum, as well as our previous assumption. This increase was due to additional float cells and regrind mills being added to the facility. However, the major driver was a reconfiguration of the historical facility. This reconfiguration will see the elimination of the need to float and produce a lead concentrate, whilst there has also been the removal of the carbon pre-float, whilst the zinc cleaning requirement has also been reduced, given there will be less concentrate produced compared to the historical operation. This increase in throughput will occur over an 18-month period at a relatively modest capital cost of $54 million, which will be funded from free cash flow. Importantly, this increase in throughput will see annualised production of 264,000 tonnes of zinc metal produced per annum, making the Century Mine the 5th largest zinc producing asset globally, and New Century to become a top 10 global zinc miner. With the restart study now out of the way, the hard work for the company begins, as they have set an aggressive timetable towards first production in the 3rd quarter of 2018. And whilst this will obviously be the main focus for the company, we do note that drilling of the hard rock deposits will begin in the new year. This could result in a potential upgrade to the existing in-situ resource at Silver King and East Fault blocks, as well as an initial resource over South Block and Watson's Lode. We would also expect drilling to occur at some of the company's more prospective exploration targets during this time. We again highlight we are still yet to give a valuation for the company's hard rock assets, however believe they offer significant long-term upside. We will review this assumption in the near future.